the press release, Jamie Dimon saying we can now have the ability to resume stock buybacks this quarter as we deem appropriate because they have exceeded their CET1 target of 13% 1 quarter early.
Very high quality beat. The return on equity here was better than anyone else. The net interest income, when we start figuring it out, we're going to realize that it is actually better. I think that consumer borrowing is very good. I look at this one and I say, okay, you want to sell this? It's because it's up a lot, not because of anything.
It has moved up. You made that point yesterday as we sort of got prepared for these earnings. Many of the stocks had moved up, have had a good start to the year.
Right.
And we're seeing a bit of a retreat. Stephanie Link also said this, and it seems to be true. These things always trade very strangely around earnings.
Well, I
typically down more than up.
I just think, I mean, you look at some out of nowhere, we have an article about Goldman Sachs losing a lot of money in the consumer business. Good, get that out of the way before they report next week. The confusion of today has historically cost people a lot of money. I did a piece earlier this week saying, don't trade these today. Invest in them next week after you sit down. But Bank of America was a very clean, good quarter. BlackRock is the one that I want to be in. Wells Fargo, when people hear the quarter and listen to Charlie Sharp, they're going to realize that this is the Consumer Financial Protection Bureau is now behind them. There are still more consent decrees, but they're almost there. There's still an asset cap, not as important as it was. But David, a buyback that I think is going to be the most aggressive of any company we're talking about, or maybe even this year.
Wells Fargo.
Yeah.
One name we haven't really settled on here, and obviously we're just jumping all over, is Bank of America. Let's come back to that for a minute.
I like Bank of America.
I'm looking at a Wells Fargo note about Bank
the tech-heavy index, and I mentioned it's leading the way percentage-wise to the downside. Today, it's down 1.12%, the ES down 1%. But look, even structurally, nowhere near that 200-day moving average. So again, above the 50 this week. We'll see if it can hold above that level. It's probably actually dipped back down below this 11,500 level. But here you can see, again, nowhere near that 200-day. So again, a reflection, I think, of what you were talking about a minute ago with Renita about Jamie Dimon and some of those headwinds. Really, I think investors are kind of coming to grips with a real dose of reality here, Caroline.
Although it's interesting, Ben, because so much of this move higher that we've seen in 2023, especially, with some of the inflation data moderating, is the fact that if inflation is cooling, maybe the Fed won't be hiking as much. Maybe it will be close to that pause, despite the fact that the Fed says that they're remaining aggressive. So this seems like a market that has been fighting the Fed, even though the old adage says not to.
Oh, for sure. I mean, and that's what the Fed's been pushing back, right? The last couple opportunities saying, again, they're a little bit concerned about the easing of financial conditions. Speaking to that scenario that's been playing out, let's dive into the TNX, right? We've got a perfect example here of what's been going on, the easing of, and how well we came off 4.3, the end of, that was October last year, and all the way down to 3.4. Now you can see how this week we're kind of hanging out around 3.5, so right near those lows that we saw back in December. Taking a step back from the hourly shows where we are in the bigger picture on the daily, because to your point, we had a huge run up last year, and as we've come off, the indices have rallied. So this is that move from 1.5% up to almost 4.5% last year in the TNX. And then look where we are again, right back down to those December lows. So now remember, I just pointed out how the S&Ps are, well, right now we're talking 200 points off the December high. Look at how yields are a bit more enthusiastic to the downside than we're seeing as far as the S&Ps to the upside. Again, that dose of skepticism that Jamie Dimon provided us. I think that's what the indices traders are looking at. But let's just take a look at a couple other products here real quick, Caroline, that were on the move this week. Crude to near 80. You can see it topped out around 79.30. Look where it is on the bigger picture, though. Crude here still hanging out near the lower extreme of the range that we saw last year and hanging out near those December lows around 70. Not really any real conviction there, kind of mid-range this week. Conviction to the upside in gold as that dollar sold off. You saw it up to 19.12, and then putting it in the middle of the range that we established last year as the dollar's now kind of found its way into the middle of the range that we established last year, 94 to 114, and this week around 104. But here you can see that dollar move, right? 94 to 114, again, in the middle of the range. So almost a mirror image of what we see in gold. And then I just kind of want to wrap this and sort of bring it all together here and provide just sort of a conclusion to these thoughts. I mean, again, we've seen indices come off with rates to the upside last year. The ES topped out around 4,800 and then bottomed out around 35. But look where we are right now, kind of range bound, contained in the TNX. We've got the 30-year on the left, the 10-year TNX on the right. And I think we're seeing a pretty good reflection of that in terms of stocks as well. You've got the October lows around 35. Here's the August high up around 43, and smack dab in the middle right now at 39. This is a market, Caroline, I've been saying this for a while, a market that's waiting for more information. The FOMC meeting we just got, the Fed minutes, the jobs data, the CPI didn't provide that catalyst to break us out of this range. We've been in basically since May, so we're going to continue to wait, simply put, possibly all the way through until the Fed meeting when we get our next announcement.
Interesting that oil's higher today, despite these recession fears seemingly back in the market today. So sort of a mixed signal there. But speaking of mixed signals, I just want to break down that move that you were talking about in the 10-year yield. Because it seems like there's obviously a market fighting the Fed, kind of mixed signals from the stock market, from the Fed. What does the bond market actually tell us about where the Fed's actually going to go?
You know, I'm glad you went there. Let me just pull up a chart to show that. I've got the ZB, the bonds. Now, Caroline's talking about the futures here versus yields, right? So you get that very well-defined inverse correlation, tick for tick, right? I mean, as we've seen Treasury futures selling off last year, we just looked at how rates were on the move higher, right? And then as the TNX topped out around 4.3, well, that coincided when we saw the ZN, again, futures bottom out around 108.26.5. So you can see, again, with the 10-year yields coming off that 4.3 back down to below 3.5 this week, look what's been going on with the futures. You'd expect them to see them rallying. Now, this is textbook, right? You've got, again, futures selling off. You've got 10-year yields on the rise last year, and then that reversal we talked about off 4.3 back back down to 3.5 as the futures have rallied back. But for two things, remember I mentioned how we've seen the dollar work its way back towards the middle of the range that it established last year. Now, if we had seen 10-year futures back to the middle of the range that we established last year, Caroline, we'd be back around 121. The other thing I want to point out is look at how the futures yesterday, and I don't want to get too granular in terms of tick for tick, but let me just zoom in on this chart here. Both are above the 50-day moving average. That's one takeaway here. But this chart shows how yesterday's move in the futures got us up to 115.13.5. That took out the high from December. That was at 115.11.5. So futures took out the high from December, but look what happened here in terms of 10-year yields. We have yet to take out the December low. Remember, I was talking about that a minute ago. So this gives us something to watch in terms of the next couple of days and coming weeks as far as futures leading the way to the upside, rates lagging a little bit, but to the downside. But if we get continued momentum up, if we get some hawkish tone, for example, from front of some of the Fed speakers, again, which we've been hearing from Barkin, he's scheduled to speak today as well. And it was just yesterday, he was hinting at 25 headed our way versus 50 in the Fed meeting. So yeah, ultimately, this is what we should be keeping an eye on because this is what's helped buoy stocks. But again, until we start taking out some of these key lows, until we get yields back to the middle of the range that we established last week, again, that'd be around, or last year, I should say, that'd be around 2.6%. I think momentum to the upside in terms of stocks taking out that 4,300 level that we pointed out earlier, the August highs, could be limited.
All right. Well, we have until February until the Fed's next meeting. So we'll be able to speculate quite a bit between now and then. Ben Lichtenstein, thanks so much for joining us. Always appreciate your insights. There's plenty more ahead on Morning Trade Live. Up next, we'll talk inflation following yesterday's CPI report. What does it mean for the Fed and the markets? We'll find out next. Stay tuned. Morning Trade Live. We'll be right back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better. It just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
You downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this. Position.
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
Welcome back to Morning Trade Live. I'm Caroline Woods, filling in for Oliver Rennick. Let's talk some inflation and what it all means for the markets with Anastasia Amoroso, Chief Investment Strategist at iCapital. Hey there, Anastasia. Happy Friday. Good to see you.
Hi, good to see you, Caroline. Happy Friday to you.
So, Anastasia, recession fears creeping back into this market. JP Morgan saying its central case is a mild recession. This despite the fact that the CPI data actually was reigniting hopes of a soft landing. So which camp are you in? Where are we heading?
Well, frankly, I'm surprised that the markets are surprised with the guidance that we saw from JP Morgan or other banks that, recession is the base case scenario. The reason I'm surprised by that is because if you look at the GDP consensus for this year is not looking for much. The economists are looking for 0 to slightly negative GDP growth for the bulk of the year. And that's what the banks are basing their outlooks on as well. So I don't necessarily think that we got any new information of whether this economy is headed for a recession or not. I think the banks are marking to market to what their economists are saying, and they're positioning for that conservatively. But there's clearly, Caroline, a tug of war going on between, on the one hand, we have to deal with the second order effects of Fed tightening, which might be a recession. But on the other hand, we've got inflation that seemingly is easing, and that easing is happening more broadly, and that's a positive for the market. So, I don't know that you can pick sides here. I don't know that you can, pick a camp, but I think this market is going to continue to be pulled in different directions. One disconnect, I will tell you, Caroline, that I do worry about is the Fed repeatedly keeps telling the markets that they want to get to 5% or higher and stay there. And if you look at the Fed fund futures, we're once again discounting that. We're below 5% on Fed funds rate in terms of implied Fed funds rate. And even a bank like JP Morgan is penciling in 2 rate cuts towards the end of the year. So that tells me that there's probably a disconnect between the market rallying, and the expectations for the bond market and what the Fed might actually do. So that's a bit of an uncomfortable feeling at this very juncture for the markets.
And we know the Fed wants to get inflation back to its 2% target. When do you see that happening?
Well, it depends on what measure you look at. So first of all, one great development this week is if you look at the CPI inflation, the headline, the fact that it's declined 0.1%, that does month over month, that does actually put us on the trajectory towards 2% by the middle of this year, which is phenomenal. So we could see a very significant downward trend in headline inflation, but that's headline. But if you look at the core CPI number, growing 0.3% month over month, that still does not get us on track to 2% by middle of this year or even by the end of it. It gets us on track to about 4% versus the 5.7 that we had year over year in this last print. So that's, again, the worry is that, while the market is really cheering the fact that headline inflation coming down, the fact that core CPI is still not quite on the trajectory to 2%, that might be a problem for the Fed. And this is this type of market where, the markets are trying to get ahead of themselves, but the Fed over and over again will likely step in and remind the markets is the core that they're focused on. And shelter is still sticky. Wage growth is still sticky for now. So that's where the Fed is likely to focus on and dampen market sentiment here.
And this is a market that now just won't be focusing on the Fed and inflation and recession risk, but also now earnings season kicking off. Doesn't appear to be a positive catalyst for the markets today, even despite some better than expected reports. Do you think earnings season will be a headwind or a tailwind for this market?
I actually think that earnings might end up being okay, Caroline. And the reason I say that is if you look at the earnings cuts that we have gotten so far since last quarter, earnings estimates have been revised lower by 6.5 percentage points. And that is below what is typical on a 1 year, 10 year, 20-year average, because analysts always cut back those earnings estimates, but they really cut them back this time. And if you look at certain components of the S&P, energy, of course, is the strong performer and the expectations there are strong. But if you look at infotech, if you look at communication services, if you look at consumer discretionary, if you look at financials, we have meaningfully expectations lower. So I think that companies might actually be okay in terms of delivering on what is a much lower bar.
Before.
So if earnings may come in better than expected, can you make the case that this stocks could move higher?
That's better.
Look, near term, I am concerned about the next Fed meeting because, once again, the Fed keeps trying to tell the markets that 5% is the destination and they're going to stay there.
Is it Sade? Good morning, Sade. Good morning, everybody.
If I were to look
well, y'all, we made it to the end of the week. I took a couple days off. I slept real good, had a great time. But let me see, what do we have? We got about 4 minutes to open the bell. So let me get this out the way. Good morning. Welcome. Welcome to my channel From Lack to Legacy. My name is Sandra. If this is your first time here, welcome. You are in my kitchen. And welcome. How we got started? How did we get here? How did we get to my kitchen? I'm a new trader. I started trading about 4 or 5 months ago. And I was tired of trading alone, trading in isolation. I was frustrated. I couldn't find what I needed in terms of a community where I felt safe asking questions. I mean, some of the dumbest questions or the most basic questions. And so, you know what they say, if you don't see it, create it for yourself. So I said, forget about it. I'm just going to create it myself. And here we are, a community of traders, beginning traders, some experienced traders, and everything in between. But we stop in here, we greet each other, we cheer each other, we post our wins, our losses, our struggles, the whole shebangity boodle. And that's what you have stumbled into, a learning community. So if you came here looking for experts, that's not this. I am not. I repeat, I am not an expert. And anybody will tell you, do not take financial advice from somebody on the internet who tells you they've only been trading for 4 months. But we do love to share. And so I'm a student of the game. I study it every day. I trade QQQ. So drop in the chat what you're trading today. I'm just so grateful for you all. I'm grateful for the community. I'm grateful for the camaraderie. I'm grateful for the people who share. Y'all know I got to get over here. I got my orders all lined up for today. I don't know what the heck is going on. So let me pull QQQ in here so we can get a peek together. Yeah, now I got calls and puts queued up. So whatever it is, it is. So hold tight. I'm going to pull in QQQ. For example, share a massive recent evaluation of semiconductors. I appreciate y'all patience, your patience. You guys have been with me, some of you from the beginning when I was sharing screen to screen. It was sad. It was a sad little setup, but I have figured some things out. I switched over. I'm doing StreamYard. It gets better. It gets better every time. It gets better every day. So this is what we're looking at today. We're looking at QQQ. C-Bar, what are you trading today? Or what are you doing? You in anything? And Frank say, that's right. You got to show gratitude. Yes, you do. Whew. I don't know where I would be without a shift in mindset. That's what this channel is all about. So let me do that again. Good morning. My name is Sandra, and welcome to my channel, From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If that sounds like something that you're interested in, you have found your people. And again, we're a community of traders, really investors, period, because we talk all things money here. So what I appreciate is that we're all levels, so nobody has to feel ashamed. If you're new, if you've never traded before, if you've never invested before, this is your place. If you're late to investing, this is your place. My life is straight up a cautionary tale. I tell everybody that. So Hey, one day I'll tell y'all the story of how I came to a measure of financial literacy. I had to get it out the mud. I had to get it out the mud because nobody in my family talked about money. And so if you wanted to know, you had to get out there and learn it. And so that's what I did. And I'm learning every day, and I learn from this community. So let me get this. Was just looking back. I was looking at, watch this. Well, let's go. There's the bell. I love opening bell. Yes, you better get back up there because I got one little lonely call sitting out there from yesterday. I swung one little lonely call. So, yeah, you better get out there, ma'am. I might need to jump in here and hedge this with some more. Let's see. What are we doing? Good morning, Johnny.
For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Just trying to see what's happening today. Morning, Marilyn. Morning, morning. Welcome, everybody. Yes, it's a good day to have a good day. Okay, dog, Marilyn. We'll see you. I know you got some stuff going on, so enjoy. And we'll talk. We'll talk when you get back. Hey, Brenda. Welcome. We're just watching QQQ do her thing. She needs to, because I got this one little lonely call hanging out there. It depends on credit available. May sell to open. 1 to 2 put credit spreads. C-bar, I'm going to get there. Recently started swing trading credit spreads. May adopt this as my new strategy. Yeah, I'm telling y'all, it's something. Listen, I am not really a swing trader. To be honest, I started out scalping, and scalping was working for me. That get in and get out, like now, like this morning, drop it, get in and get out, grab that little money. It worked. And then I started holding them too long. Then I became a swing trader, basically a day trader, swing trader. So I'm all of those things because I'll do whatever works. But swing trading, I'm telling you, if you're patient, at least this has been in my short experience, is that they will pay off. You just got to be able to withstand, especially if you understand, for me anyway, with QQQ, if you understand the price range, like what she's capable, ATR, what she's capable of trading in a day, you already know. So yeah, I think it's a place for all of it. I'll talk less and let's get this news turned up.
Not quite as bad as the pre-market was looking. S&P, Dow, NASDAQ, and Russell actually all off about 0.8%. So we know that earnings season not off to necessarily a great start. Lots more companies to actually talk about. So let's bring back in senior markets correspondent Renita Young.
You all, please check out those resources. I'm telling you, I'm not sure. I can't remember who sent it to me, but there is a beautiful page for a trading plan, which I know I need to. I need that. I need a bunch of those pages put together. Would you look at this?
Were, of course, profits.
Oh, wow, look at the selling pressure.
Estimates for
Okay,
Bank of
I'm loving it
America
now that I can
as
read
higher
wicks.
interest
I'm
rates
learning about
did help
candles.
out
I
the
can
company.
tell that,
Boosted
okay,
that
I'm not
interest
surprised
income.
now that that's a red
Revenue
candle
came
with
in
all
at
that wicking.
$24.53 billion. That was
So
an 11%
let me get
growth
ready.
year over year. You can see
Market
earnings per
down at
share
open,
also
not
grew there,
surprised.
came in
Too
at
many
85
updays this
cents
week.
versus that estimate of
Somebody better tell the
76
truth. Too many
cents. So those
updays.
came in better than
They don't like
expected,
that, y'all out here
but
making money.
the net reserve was at $1.6 billion.
Hey,
We can
Lucille.
see a
Hey.
stronger trend now of companies or banks.
Okay, y'all, I
shoring
gotta
up their
focus today
reserves
because I gotta
due
make
to
some
loan
moves. I got
losses.
this one little
As we
call
head
hanging
into a
out there, so I need to go
recession, many
check
of
on
them are
her.
actually saying that
So
we're
I'm gonna take
possibly
y'all
heading
out
into
of
a
this.
recession. That
Let me
addition
turn this
was
up.
versus a release last year or the year
And I'm
prior
gonna
in
go check
2021
on
of
her
$851 million.
right quick,
You can
and we'll
see
see.
where the
Hey, Miss
return on
Vice.
average
Welcome,
assets
welcome,
also
welcome.
came
Y'all,
in
I'm going to check on my one little lonely
92%
call.
versus the 88% in the fourth quarter of
Yeah,
2021.
she
Now,
peaked it.
client
She gonna need some
balances
help.
also
We're gonna
remained
need to see what
relatively
this
flat
market is
at
talking about.
$1.6 trillion for the fourth quarter. Average deposits came in at more than $1 trillion. That was up $20 billion or 2%. And so some of the headwinds that these banks have been talking about have really been the same. risk of a recession, growing fears of a recession. The headwinds that are also included are the Russia-Ukraine conflict, high inflation. Those
checking
things
all my
will
stuff,
definitely be the
my
bigger
market
things
watch thing,
going
and
into
all
the
the,
year.
you know.
Yeah, CEO Brian Moynihan over at Bank of America described the economic environment as increasingly
I'm gonna be a
slowing,
little
so
quiet
definitely
today, y'all. I
playing
need to
into some of those
focus.
fears.
I find I
All
trade
right,
better
let's
when I
shift gears and
focus.
talk about United Health. It's
When I'm
actually been under
unfocused,
pressure
I'm out
this
here
year,
just
despite healthcare
all
being a
willy-nilly,
big
but I've
winner
been working
last year.
on
It's
my
down
entries
on
too.
earnings. How did they do?
My entries, I get it. Y'all have taught me, y'all are schooling me. I'm learning to enter, you know, near support, near resistance. I heard it, but now it makes sense to me. It makes sense now.
Urgency calmed down a little bit during that quarter, and it's all enrollment gains.
See.
Let's take a look at some of the numbers. Earnings per share came in at $5.34. It beat it by 17 cents. Revenue was $82.8 billion. Also, actually right at the same estimate there, you can see. But the company's full year revenues grew 13% year over year to $324 billion. And it saw double-digit growth at two big parts of the business. The Optum and United Healthcare units both saw that double-digit growth. Full year earnings from operations it increased to 19% to $28.4 billion. And cash flows from operations for the
I'm looking at these candles form and how long these wicks are. And so I understand, y'all saw it. It's a lot of selling pressure. Hold on one second.
Was 14.7% there for the company, and it did reaffirm the outlook.
All right, so United Health down about 0.6%, so already off its lows in the first few minutes of trading. We're also seeing the same thing happen with the markets. Those losses are losing some steam. So lots to move this market today. We'll see where it all goes. Renita Young, thanks so much.
Thank you.
All right, let's look at some other movers on the day. For that, let's bring in Jeff Pierce, Senior Manager Derivatives Trading at TD Ameritrade. Good morning, Jeff. Happy Friday the 13th. Not a happy day, though, for Tesla investors.
Is it Friday the 13th? Oh, Lord Jesus. I didn't even know that. Not that I'm superstitious at all, but I didn't know that.
What are the analysts saying?
Yeah, well, we've got analysts really weighing in on the reductions in price from Tesla themselves, who cut prices on several of their vehicles by nearly 20%. This will allow buyers, certainly to some buyers at least, to qualify for the $7,500 tax credit. But the price of the Model Y was cut by almost 20%, the Model 3 by almost 14%. They also
I'm going to add one call maybe to my call that I have.
Try to spark sales in the face of these interest rate issues and the competition out there. We know this is not the first time we've seen Tesla recently make cuts or incentives. Earlier this month, they cut prices in China. Late in December, they cut prices for the Model 3 and the Model Y by about $7,500. They also have offered customers about 10,000 miles worth of free charging that they agreed to buy the cars before the year end. And we saw that although this may have had an impact on deliveries, they still do not meet Q4 expectations, coming in at just $405,000.
Hey, BB. Hey, everybody. Okay, I'm pulling y'all back in so y'all can see. I'm just sitting here. I'm deciding. I know y'all probably already got y'all stuff all queued up. I'm watching and trying to decide. So sorry, y'all about to get some cheek and some forehead for a minute, because I got to decide which way I'm going today and what the play is going to be, because you know we in it to win it.
Line rating and $140 price target, talking a lot about today's price cuts and the future impact this could have, especially when we look at the impact on gross margins.
You know, it's interesting, Jeff. I got a note from Dan Ives this morning. He has a $175 price target on Tesla, so lower than, where it was just a few months ago, but still bullish on the stock. He says, we believe altogether these price cuts could spur demand deliveries by 12 to 15% globally in 2023, and shows Tesla and Musk are going on the offensive to spur demand in a softening backdrop. How do you think we should look at this? As more cars will qualify for these tax credits and it could boost demand, or they're cutting prices.
I'm learning about getting near support, you know, and I'm paying attention. So that's what y'all are watching. I'm learning. So let me at least pull this in for you all for a second so you can see what I'm looking at. I just keep studying QQQ. Currently in between some support and resistance, bouncing back and forth. I know. That's what I'm looking at.
Investors
So
interested in them seeing more sales, seeing more deliveries come out in future quarters. They have not met those expectations. If you look in the last quarter, on the same note, we know that this could certainly spur some outrage from current Tesla owners. We know when they cut prices in China, people that had already ordered Teslas were still paying the higher prices. This definitely upset their customer base. The question is whether or not they can continue to compete without just cutting prices as competition continues to grow from some of the big names out there like Ford and GM.
Yeah, we saw.
good morning, living my dream. Took a quick trade on Microsoft puts on a nice 1 minute 3-bar play. Oh, is that what that means? To the downside for a nice 57. I love I love trading talk. I really do. One day I'm gonna be able to talk the talk just like y'all talk the talk. I'm gonna be able to talk in percentages. You just hold, just wait. I'm coming. I'm getting there. But I so enjoy, if you all haven't checked out Living My Dream Trading, if you haven't checked out his YouTube channel, please do yourself a favor and go check it out. I'm telling you, his setup is clean, it's transparent, and you can learn a lot. If you're a new trader like me, there's a lot of value there in his content. So please check him out. For a minute, Johnny, I'm serious. I thought Johnny and Living My Dream Trading were the same person, because you all are meticulous in my estimation. Your trading is so clean. You all look very technical and very informed. And that's what I like. That's what I need. I need to understand for real, like all the intricacies. I want to know. I want to know it all. I think that's how you get good at trading, is that you got to be a student of the game. You got to do it. You know, you can't, I don't think initially learning, you can pop in and pop out and learn this. I eat, sleep, dream, think, QQQ, and the market. It's just, it happens to catch me and I'm caught. But would somebody please look at these wicks? Oh, this is beautiful. So what I wouldn't have conceptualized before starting this candlestick study is what this means, that even though the buyers ultimately wound up in control, there was a whole lot of selling pressure there. And so I'm not surprised to see this next red candle where sellers are in control. See, I would have seen those candles and I knew wicks meant something, but I wouldn't have been able to conceptualize that. Like, what does that mean in terms of, you know, momentum? And, you know, all of this stuff is so important. Yes, I'm getting there, but it's thanks to master traders and traders who are willing to share their expertise with little old me and the rest of the community. So I know y'all don't even have to, but for whatever reason, you are gracious in your sharing, and we humbly accept over here. And I hope that there's some value that you get, maybe just in the camaraderie, you know, just a place where you can talk shop, and everybody's talking the same language and the same talk here. So yes, I'm gonna get there. I'm telling you, living my dream. I use percentages or risk, R for risk, as opposed to a profit number, because there's more value in those numbers, because no two account size are the same, but risk and P&L percent is. Yes, that's a common language to talk to other traders, that yes, and you can talk across. I think also when you talk that way too, you can talk across equities. You may be trading Forex or futures or whatever, but everybody understands this is the percentage that I gained and this is the percentage that I lost. Yeah, I'm a teacher. You talk that talk to me. talk that makes sense and that's numerical, and we can all have a common language and a common base. That makes sense to me. Yeah. So let's see all this choppity chop first thing in the morning. And then I will email you so that we can connect. I'm not sure if you're talking about me, Lucille, or if you're talking about living my dream trading, but please don't forget, you guys go check out his channel. And Chris saying, y'all know I sing the praises of the best. And Black Girl Stocks, I love her too. We got some great YouTubers that are out here doing it. They are spreading the word that, yeah, I've heard this, and I know you guys have probably heard it too. 90% of traders lose money. 90% of investors lose money. Let's be clear. Ask anybody who's in the market. It's managing risk. That's what I've discovered. You got to manage risk. Ooh. Well, hello there, big old red candle.
You look at that quarter versus a year ago, that was up about 7.6%.
Fighting against this. Look, all that support.
It's possible you could see it slow down.
That's my 50, my 9, and my 13. And you at 276.50 as well. You better hold that spot, QQQ. Don't you dare. You better hold it right here. And so it looks like I'm learning all of these things. I'm telling you all. When I was in class, they would be throwing out all this lingo, and I would just be sitting there like, I don't even know what that means. You know, bouncing off of support. Now I know what that means. When support, what was once support can now be resistance, or what was once resistance can now become support. None, those are not words to me. Those are not words. I understand what that means. And so that's what I think a part of my mission too was not only to create a safe space where new traders like me could come and tap into the benefit, tap into experienced traders. I wanted to create that safe space, but I also wanted to fill in some of the gaps for people who are new. If you're sitting in a class and you can't ask questions or you can't get the questions, hey, no bueno. That was me, no bueno. So I created the space that I needed. I needed a place where I could come and ask questions. Yay, I'm telling y'all. And Miss Vice, you're gonna love his content because it's good, it's concise, and I'm gonna tell you what else I love. It doesn't take all day. Whew, I promise you, I do not want to sit down and watch 45, 50-minute videos every now and then, but for the most part, no. Say what you got to say to me. Get me in and out. The way my PTSD is set up, I don't have all day for you to be communicating. Send it to me in an email. I was like that even in the workplace. Oh, are you kidding me? Thank you. You come over and support us. I'm tied up here most of the day, so I understand too. You also have a Discord, and I'm going to say this to everybody. If you're trading in isolation, you cannot possibly be the best trader. At least I'm not. I need this. I find that there's so much value. They say if you want to go fast, go alone. If you want to go far, go together. And so I believe that. I definitely believe that adage. Okay, let me think now. What do I want to do? Because we're right here. This is a nice little 2277. Okay, y'all talk amongst yourselves. I gotta go do some studying and looking because my good sis QQQ is on the move. My good sis is doing things.
Thinkorswim by TD Ameritrade.
Watchlist can help you keep track of securities you're interested in.
People have come in this chat and dropped gems that help me. I mean, in a trade, I've had people. He's also not bad on the eye. I know. Look at this. You get, girl, chocolate with your money. It's a good life. Miss Vice, it's a good life. I'm just saying. Now, see, don't get anybody in trouble because I don't know anything. We're just talking crazy. But yes, ma'am. None of that was lost on me.
From the charts tab,
276. 95. Okay, what are we doing? Are we going to hold 277? If we lose 277. This is why I come here. This is exactly why I come here. Single and ready to mingle. You know what? See, this is why we do this. I love my people. I really do. I love what we do here. Who doesn't love some chocolate? I love all y'all. We come here, we have fun, we laugh, we joke, we trade, we make money. This is life. This is a good life. I love the name of your channel too. Living my dream trading. I love it. Y'all, come on. It's all in fun, all in good fun. But I find that the more I'm on the internet, you guys, the more I'm finding more Black traders. And I'm finding people who, it's my vibe. It's my vibe. Not because it's some young traders out here and I like what they're doing. It's just I'm not into it. I see momentum traders and all kind of stuff. That's what I love about YouTube and the internet. You can call your people to you. You really can. What was I coming over here to do?
So as you said, the commentary is pretty
I
grim.
forgot just
JP
that quick.
Morgan's Jamie Dimon calling for a mild recession, which actually
Oh, I'm about to pull y'all out because I'm going into my account. I'm going over here to look at some money. See what's happening today.
But when you actually look at the breakdown of the consumer balance
See
sheet,
what we got going
how
here.
strong is the consumer balance sheet right now?
Well, the consumer balance sheet is actually very good, as reported by the U.S. government. I think the concern is all about the future. Will the consumer balance sheet stay healthy? Are they running out of steam? In fact, household earnings are doing quite well, and job growth is still very, very strong. So it's not likely that the consumer balance sheet is going to take a major hit in the near term. In fact, I've been anticipating a recession for a while, like most economists, and looking at the data, I keep on pushing my forecast of recession.
Okay, so we've cleared the 9, the 13, and the 50. We are coming right up on the 200-day moving average, and we shall see. Okay, you sent me an email. Okay, let me check right now because I'm sitting right here.
So Chuck, you're not the only one that's been forecasting a recession. I feel like everyone has been forecasting a recession. So why is this talk of recession from the banks dragging these bank stocks lower?
Oh, that's a great question. We look like we're discounting the same phenomenon multiple times. The banks have been weak for quite a while. They're all cheap. On the basis of the latest data, Citi is trading at 60% of book value, of tangible book value. That's incredibly cheap.
Lucille, you sent me an email? Let's see. I got an email from Maryland. I don't see an email from you. Unless you're not talking to me. And in that case, let me butt out.
As an institution, I think of it as extremely attractive. But the market clearly is nervous about loan losses, even though Citi is adding to its loan loss reserve. I think there's a real disconnect here.
So would you be comfortable buying Citi or some of these other bank stocks right now with a recession in the cards and with interest rate hikes potentially nearing the end?
I consider the banks to be extremely cheap, all of them. JP Morgan the least, because it's the most expensive of the banks on a relative basis. It's not expensive, but relative to others it is. Citi and Wells Fargo, both in my mind, are extremely attractive, as is Bank of America. Citi, 60% of book, Wells Fargo close to book. These are cheap institutions, and they're all making money. And the tangible book value for each of these companies has gone up. To the point where they now are getting stronger relative to the Fed's imposition of capital requirements. And so it's likely that almost all of these institutions, if not all of them, will be able to buy back stock in 2023. So I think of them as very, very attractive.
All right, so potentially a value play and on sale today. Taking a look, Wells Fargo off 3.7% today. Just quickly, in terms of their decision to retrench from the mortgage market, what could that mean for Wells Fargo? How are you factoring that in?
Okay,
yeah, that's an interesting thing. So the mortgage business has clearly gotten a lot a lot more competitive.
You see me
and they
looking.
don't see
I'll be
as
back
much
after a while, team.
profitability
All right, Johnny,
in that
see you when you
business.
get
Part of
back.
that is related to the change in
Okay,
rules
so I
with
just
regard
watched
to capital
QQQ march
requirements.
right up
So
to
Wells is
this
going to want to hold less of that
200-day
paper
moving
on its
average
own balance
and
sheet.
bounce right off of it or reject right
It
off
remains to
of
be
it.
seen how much they
That's-
retrench.
That's my
They,
interpretation.
they clearly are
So
planning to
hopefully
do
you
that,
guys
certainly
can
reduce
see it.
headcount, become a lot more efficient, but that's the overall mantra of the bank right now anyway. They're trying to reduce their headcount and become a lot more
You
efficient.
can see what I
accomplished
see,
some
I
of that even
hope,
in this quarter.
that
Their
here
core
is
efficiency
our
improved by 140
200
basis points, which is considerable. But
moving
clearly they want to
average
do
right
more.
here. And
The
she
real question is,
almost,
what is the
the
most
wick
attractive business
almost
for them to be
touched
in?
it.
This is
We got up to
basically, first and
277.71
foremost, a retail institution.
and bam,
Huge deposit
rejected right
base,
off of there.
huge core
So we're
lending
between
base,
these
for retail.
SMAs.
So that's the business they
Let's see
appear
what
to be
happens.
focusing on. And if that's their most profitable business, that will work out very well for them over time.
All right, we have to leave it there. But yes, Wells Fargo now officially negative for 2023. We'll have to see how this plays out. Chuck Lieberman, Chief Investment Officer of Advisors Capital, thank you so much.
Thank you.
Now it's time to trade some of the banks. For that, we'll welcome in Tom White,
Let's see.
Senior Options Contributor here on the network. So, Tom, we have yet to hear from Morgan Stanley and Goldman Sachs, but the other big banks dragging them lower today, both off less than 1%, but getting closer. So let's start with your first trade, Morgan Stanley. How could you trade it ahead of its report on Tuesday?
Well, I think if you look at maybe some of the lack of IPO, lack of M&A.
I know what I'm going to do too. You know what I'm starting to do, you guys? I'm starting to trade and keep my candle thing nearby so that I can refer to it. I'm telling you, it's not, I don't even know that it makes any difference in my trading, but it makes some difference in my learning. It makes a big difference. So on the other side, on my other laptop, I have the things, the resources that I dropped in the drive. I have those resources. And so as these candles are coming in and forming, I'm actually sitting here studying these candlesticks and candlestick patterns and tell you, just a life, just
We're not to the
makes a
January
difference.
Monthly cycle that expires
Makes
next
a
Friday.
difference. So I would
And
say
just buy
anybody,
me
if
a
you're
simple put
studying,
vertical that's,
you know,
slightly or basically at the money.
if
Buy
you
me
are
89
doing like
strike
me, if you're
put, sell me
learning,
85 strike put,
keep the
or otherwise
candle
bearish put
thing
vertical to the
nearby
downside. You're only
until,
risking
you know,
about $1.50
can't hurt,
debit on
can't
that.
hurt.
It's actually a little bit lower now. The stock's moved up a little bit. But if you pay $1.50,
So did you
that's gonna
guys
be
see
your risk
how
on
it
the trade
rejected
that can expand to $4
off of
if it moves at one
that
standard deviation of the
200
option market's
again?
pricing in down to the 85 level. This gives you downside exposure if you think maybe Morgan
It
Stanley is
touched it
going to
this time. Bam,
underperform
touch.
post earnings also, but it's a risk
Damn.
trade, really short-term
But
earnings
it's
play.
caught between these two. So I wonder,
Okay,
you
and
know,
then
does it
Goldman
bounce
Sachs,
until
obviously
it breaks
investment
out
banking
or
not going
does
to be a
something?
strong
I don't know.
point for Goldman
I
Sachs.
don't know.
And its consumer banking division,
I
we're
asked the
already
questions
learning about
around
details.
here.
That's not
I asked
profitable, so that probably
questions.
will be another headwind. So how would you trade Goldman Sachs ahead of its report on
But we
Tuesday?
opened at
It's off about 0.5% right now.
Yeah, you know, they're almost back to year ago
76.50.
levels on the stock, and a lot of people like this
We're
one
up
best in this
about
sector.
75 cents to
But you know, implied
77.33.
volatility is elevated in here, about plus or minus 3.5% move. They're expecting.
I had a little anxiety today. I don't know. Does this happen to you all as traders? Sometimes when I listen to the news, it causes me more anxiety than good. You know, because everybody is saying what they think is going to happen. And sometimes it's better for me to just come watch the chart. I swear I feel that way. I think me and the chart and being informed, you know, learning, becoming a student of, you know, I like technical analysis. I'm sorry, I do. But studying that and studying the chart, staying the course and sticking with what I know gives me way more comfort than listening to 10 different people first thing in the morning. Oh, come on, baby, break through that. Because you're going to have to break through that to get somewhere. So you got to break through. We got to get past. Keep trying. That's one try, two try. Let me go on to 15 now that we got some stuff under our belt and see what we're doing.
basically a neutral
Okay.
strategy with a bias towards the downside, so you give yourself some more room and have less risk. If you're collecting 210 on this short iron condor, your risk on the downside is only going to be about $40 per spread if it goes below 250. But on the upside, you've got nearly $3 in
So
risk.
we're above the 9 and the 13 on our 15-minute chart, and just kind of choppy, stuck in between. We need to clear all this goodness, all this yummy goodness. And we need $2 more in growth. That's what we need.
Room to the upside as far as cushion goes before you start getting hurt on this. But this is a neutral strategy, taking advantage of that higher implied volatility with the expectations that we're going to see Goldman.
Yep, Seabar says, yes, the talking heads make it easy for you to doubt what you know is true. Trade what you see, not what you know. Yep, I have to quail so many voices. I'm telling you, this is a challenge. Trading is a challenge. It is a challenge. I welcome it, but it is definitely a challenge. Okay, well, that's a nice little, we're off to a nice little start. Looking good. Let me roll down here and see what's happening. I heard Chris Sain say that to check all the levels, all the oh, that looks good.
Select style to change the appearance.
Okay.
You can add drawings by selecting drawings, drawing tools, and then type of drawing. For symbol comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the chart tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
When traders tell us how to make Thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders.
Trying to see if she'll get above 277, if she'll get above 280. I mean, 277, if she'll get to 278 and stay. Let's see.
Actually, I'm taking one less look at my dashboard.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight. We'll see ya.
They're getting so smart.
Choose the app that fits your investing style.
What y'all studying? Anybody studying anything in particular? I have watched myself become such a better trader, y'all. I remember basically in the beginning, Lord knows. I mean, I would go with sure bets, basically. You go with sure things. You go with what you know. But there was a time early on, I basically was guessing. When I think back to my technical skills, looking at those charts, I was basically guessing. I was like, oh, well, it's been going up. It's got to continue going up. No. Oh, I was out here, y'all. That was in my days of trading on Robinhood when I first started. Oh, Lord. That's why I don't, okay, I'm not going to say I don't like Robinhood, but those charts were awful. They were so awful in the beginning.
The losses are very modest.
They've gotten better, but they still aren't what they need to be talking about trading. Okay, so I'm looking to see QQQ was playing around the 278 range. I'm trying to see if she'll get above 278 and stay.
All right, let's bring back in Ben
We'll
Lichtenstein
see.
to talk about the consumer sentiment data. So
We
Ben,
will
bank
see.
CEOs not that confident, consumers maybe a bit more. Break it down for us.
Yeah, big time, Caroline. This was a strong number to say the least. And it seems like the market's having a hard time trying to figure out what to make of this one. You mentioned how we've paired some of those losses that we had seen before, and we're talking about with the NASDAQ, which was down over 1%.
If we could get above that,
today,
that is that's the last one. That's the 200. If we could close above that, that's my 200 moving average on my 15 minutes. So that would be great. If we could clear that, close a candle above that.
Prior was 59.7. Now, keep in mind that bottomed out back in June around 50, ran all the way up to 59.9 in October. So that's a new high there again, and a recent new high, I should say. A big, strong performance there in terms of consumer sentiment, again at 64.6. I've got current conditions at 68.6, topping expectations and prior levels, also falling in line with that. Consumer expectations above expectations and prior levels. Now, as I look a little bit closer, this is where it gets kind of interesting. You've got the shorter term inflation expectations, which actually came in lower. Look at that at 4% from 4.4%. Keep in mind, that actually topped out in October, November of last year, up around 5.1. So down 1.1% from the highs that we saw October, November of last year. And then as I look at the longer date, it actually had a slight uptick there to 3%, that bottom line from 2.9. Now, again, I mentioned here, it seems like the market's kind of having a hard time trying to figure out exactly what to make of this one. Let's just dive into the intraday time frame. You can see selling off here into the cash open this morning, rallying back, hanging on around 39.85. You see, these are 1 minute candles. So this is the immediate response to that number. But I want to kind of just look at yesterday as well and bring some of the big swings we saw yesterday into the picture here. And you can see that
I missed my entry again.
Michigan sentiment nowhere near what we saw in terms of some of these. Look at these candles we were seeing.
I missed my entry again.
Yesterday. We're talking 20, 30.
Just checking my charts, going back and forth, checking. I should have entered when I had a chance. I was going to enter at 277.
Look at these numbers.
We'll see if maybe we get a pullback in here.
Moving the market, right? Eco data. And look at this. Notice how the VIX is taking out the lows from last month, right? Below the December lows, below 20, down to 1953. But look at this here, back to levels that we haven't seen since the basically beginning of last year. And I do want to point out here, though, gold rallying. You've got also, we talked about the dollar coming off here, but I also wanted to mention here, Caroline, how we've also seen, Bitcoin, which has been rallying. But now I wanted to bring to your attention again, remember earlier in the show, we were talking about how the Dow, the S&Ps, the NASDAQ, the Russell, specifically the S&Ps, I pointed out that high from last month of around 4180. Here we are currently trading just below 40 at 39.87. So again, you got the VIX taking out December lows, but you've got the ES nowhere near the December highs. So something's out of whack here right now, Caroline. It's going to be interesting to watch this divergence play out and which way either the S&Ps have a ways to go to the downside, or I'm sorry, to the upside and a big rally coming, or the VIX has it overdone to the downside and risk premium is cheap as we head into the end of the week.
Well,
anybody send limits? I hate waiting on a limit order.
I'm looking at the Dow that's essentially flat. It's down about 30 points right now. Major averages all well off earlier lows. Only, we're only about 30 minutes in, 35 minutes into the trading day, or I guess a little bit more than that. But if we do manage to see this market turn around and possibly close in the green, what could that do to investor sentiment?
Well, I think it would give it a little bit of a boost here, Caroline, into the end of the week here. I mean, at least in terms of just having kind of gotten that first look at earnings, right? I mean, that's where a lot of the focus was this week once we got past that CPI number. But there's a lot of anticipation in terms of what not only the banks, but what some of these retailers are going to bring in terms of numbers heading into the fourth quarter. I mean, a very important period of the year for some of these big names. So, as we look at the Dow, I just wanted to point out this has been the pillar of strength in many ways in terms of stocks, right? These large caps, they've been holding above the 200-day moving average, which again, this week we saw all three of the majors here, everything but the NASDAQ above the 200-day moving average. The NASDAQ here, let me just show you, the Dow's been strong again above 33,000, but look at the NASDAQ, a stark contrast to what we've seen in terms of large caps. I think a big part of that is just the uncertainty in some of these tech names. Again, I think earnings will be key for that. But also, you've got the U.S. dollar, which has come off. That was a big headwind for the Dow, that strong dollar up to 114 last year, 115. I mean, that impacts the multinationals and the business that they conduct. And ultimately, right now, what we're seeing is more reflection, I think, of some of the uncertainty in terms of recession, some of these growth names,
Oh God, I did
higher
it
borrowing
again.
costs, you know, and what we've seen as far as some of the Fed's initiatives. But yeah, definitely, again, a number this morning that's going to probably raise more questions than it answers, I think, unfortunately. But keep in mind, again, this market's been so headline driven. This is what we need to keep an eye on. Unfortunately, just not a lot of reaction one way or the other in response to, I guess.
Also curious, what I am seeing that's green on my screen, Netflix up 1.5% that reports next week. Peloton up almost 1%. Etsy up 2.3%. Seeing strength in those COVID winners that became big losers. All interesting developments. Ben, have to leave it there. Thanks so much.
Thanks to you, Caroline.
Now let's bring in Kevin Green, senior markets correspondent. So Kevin, first of all, good morning. Happy Friday. We're talking Raytheon this morning after a downgrade at Goldman Sachs. It is not a winner today. It's down about 2.2%. Tell us about this call.
Yeah, definitely. So Goldman Sachs actually downgraded Raytheon to neutral from conviction of a buy rating with a price target of $105, and that's actually down from $115. So they are a little bit concerned when it comes to the defense side of the business here. And even though the growth rates and the valuations have been, fairly great over the last year, especially unfortunately with the conflict that we have seen in Ukraine and Russia, the question is how much is that going to actually pull forward here in 2023, as well as government spending. If we do see any type of spending cuts from the government side of the business, then obviously we might see lower revenues coming in for Raytheon. Also, they do believe that there's lower.
Okay, I guess QQQ is just going to go for.
They do believe that because
go back up to 280, I guess.
That they will carry over to 2023, and that could
y'all.
impact 2025 targets when it comes to earnings.
This straight.
So I was just taking a look at the breakdown on Refinitiv. Still are more buy calls than holds on the stock. So Goldman not necessarily in the majority here. 16 buys versus 10 holds. No sells. Median price target of 107. What was Goldman's price target for this?
Goldman's price target now is $105, and that's actually down from $115. So about a $10 move to the downside.
Okay, so not necessarily, when there's talk about this defensive positioning in this market, obviously it's been a bit risk on. I was just talking about Peloton, Etsy, names like that being on, but not necessarily looking at the defensive or defense sector as a good play right now.
Yeah, exactly. Especially when it looks at the U.S. government spending as well. We saw kind of a little bit of back and forth when it came to the House of Representatives and trying to elect a speaker. And now there's just a little bit of concern that maybe the defense spending.
Okay, y'all, I'm just watching my 2 calls because I'm getting out today. I'm taking my little profit. I don't know how to calculate profit in terms of percentages. However, I do know what a profit looks like, and I have learned my lesson that when you see the profit, take the profit. You can always go back later, but so that's what I'm doing, y'all. I'm just sitting here chilling,
Kevin, thanks so much for breaking it down.
waiting, hoping
Now let's do some
that we could just get on to the profitable side because she's doing her thing like she always does. It's looking good. I'm looking across all my time frames. Let me go out to the hour.
$105 price target. It's currently trading at 98.42, so it does see some upside despite the cautious rating. How would you go about trading this name?
Okay,
yeah,
we're
it's
looking
an interesting
good.
dynamic, and Kevin touched on a couple of key points there. And I think the one primary is
everything
the fact
is
that
looking
a
good.
lot of the perception is a lot of the spending was pulled forward due to the situation in Ukraine last year, and with some of the issues, the challenging issues that the Congress is dealing with right now, and then potentially trying to get further spending bills through there in the next couple of years could impact the defense and aerospace sector. I think that's part of the reason why Goldman is looking at this as a potential slowing of some of the pull forward type of price action that Raytheon has experienced. So I think Raytheon here is, it looks like it's topping, certainly today it's off, and it didn't take out the highs from earlier in 2022. It certainly outperformed the market in the second half of the year, but I could certainly see the stock falling back into this range that it established in the middle of last year, which is closer to the 90 level, and that would be right around where the 200-day moving average is as well.
So what would the actual trade be?
Yeah, so the trade, the example today would be what I'm looking at is a put butterfly, buying a put butterfly, and that's buying the February 95 strike, selling two of the 90 strike puts and buying one of the 85 strike puts. Relatively neutral to slightly bearish trade, anticipating a drift lower here over the next month. And if we break below 95, you can do this trade right now for about 60 cents. So you wouldn't need too much below 95 for this to start to have some intrinsic value. And I could certainly see Raytheon now, with its losing some of its momentum and the sector losing some of its momentum, drifting back down towards that range, which would put this type of position in play.
So Dan, broadening it out a bit, as I was just chatting with Kevin, this is a market that in 2023 has so far been pretty risk on. Would you be more likely to bet on growth in this market or be defensive?
Early on, I'd still think I would lean more towards being defensive, just due to some of the characteristics that the market's contending with, and the uncertainty surrounding the Fed. The bond market certainly pricing in a high probability that the Fed's going to call off the dogs at some point this year. When that happens, then I think growth will certainly benefit significantly. You're seeing some market participants trying to get ahead of that a little bit right now, as we're seeing the NASDAQ outperforming so far this year, Caroline. But overall, I still think it's a little too early to make that transition. Although I do think at some point as we move through the year, once the rates start to roll off, and I do think that will happen in the second half of the year, then growth I think will certainly be an area to consider when you look at the rotation in the market.
And more specifically, what areas of growth would you want to consider when the Fed calls out the dogs?
Well, you want to look at area. Well, certainly one area would be like the bigger names. I think the bigger names have struggled in the last year will catch a bid. They've been discounted heavily. And primarily, one of the big headwinds, Carolyn, is the fact that the stronger dollar was a big headwind for them last year. And we're seeing that roll off now. That continues and rates come down. And certainly, I think some of the big names will benefit substantially from that. And that's the FANG names and such. So, the leadership that kind of took us into 2022 and then lost its momentum certainly could resurface in the second half of this year if we see rates come down.
It is so much to
continue
learn.
to decline.
All right, we'll leave it there. Dan Deming, Managing Director of KKM Financial.
All right,
Have a good long weekend.
Thank you. You too.
Thanks. Coming up, we'll dive more into the economic outlook following the latest inflation data and consumer sentiment. What does it all mean for a potential recession and your portfolio? We'll break it down next on Morning Trade Live.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding.
I'm just watching her do her little inchy up thing.
Options, futures, and more.
And
Best of
I know
all,
there's
you
nothing
can
technical
ask
about that
questions by
talk.
chatting directly with an education coach.
But I gotta
It's
stay on
interactive
top,
learning
y'all.
at its
Okay, I gotta
finest.
take y'all out because I
Tune in
promise you I'm about to
live
get
or
out.
watch on
I'm
demand.
gonna get out of the
Head over to
trade because I don't want to lose any
tdameritrade.com/webcast
money.
and start learning today.
32. Yeah, I don't know. 78. We can't lose 278.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day from the opening to closing bells. Tune in to the TD Ameritrade.
We got up to 278.50. She rejected or she bounced off and she's back down 278.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim, she wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web.
Okay, y'all,
Because
I'll be right
platforms
back
this
myself.
innovative
I'll
aren't
be
just made
back.
for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list. When the default list appears, select the name box, then create watch list. Enter a watch list name. To begin adding securities, enter a ticker symbol in the symbol box, then select enter. Continue adding all the symbols you want in your watch list, then select save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform.
Good.
From the
Okay, I'll
Charts
be right
tab,
back, y'all.
select the list icon and then add to watch list. From the Scan tab, right-click a security and then add to watch list. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
We're back on Morning Trade Live. I'm Caroline Woods, filling in for Oliver Rennick. Let's welcome in Amanda Ribello now. She's head of passive sales, U.S. onshore at DWS Group. Hey there, Amanda. Thanks for joining us.
Thanks for having us.
So I was going through your notes, and I see you say it's time to dip your toes back into the market. Before we get into the where, tell us why now is the time.
So I think that last year was an annus horribilis in terms of markets and across all different asset classes. We do identify that there is some value in certain exposures. And just when you think where cash levels are, if you want to be exceeding this, then definitely being back in markets, there are some opportunities.
Okay, so let's talk about where you're finding value, starting with here in the U.S. What sectors would you be investing in?
Yeah, so we do still quite like U.S. equities. We do think that the S&P 500 is going to continue to see some resistance at the 3,900, 4,000 level. So you need to think about different ways to play U.S. equities, not just the broad-based benchmark. And so what we like is thinking about a value component and also thinking about a dividend component as well. And when we look at these sorts of sectors, they're typically quite heavy in financials. We think they'll do very well in terms of the rising rates environment. And then also thinking about other sectors like aerospace and defense, just thinking about how we'll be keeping the world safer. There'll be continued revenue sources there, which obviously helps the stock level. Also thinking about healthcare, this long-term trend of aging population is not going away. We start to see more and more travel again, so liking hotels and airlines too. And then just thinking about communications as well in the ways that we continue to be in touch with each other. All the momentum there just continues to be ever present, really.
All right. Well, Amanda, bank stocks and defense stocks all lower today, so it looks like you could be dip buying. But you also prefer small cap over large cap. And I want to know what your recession forecast is, because typically one would think that in a recession, small cap would be hurt more than large cap. So is that a positive call on the U.S. economy?
So we think it's more positive, but on a relative basis, at least in the near term. We do think that Europe still has some pain to feel. So just thinking about where you're going to put your money on the equity side. In the near term, US makes sense, but in the long term, we do like Europe and Japan in particular. And then when we look at the US domestic picture, we do think that there is some scope for, we think the stocks which have international revenue exposures are maybe a little bit overdone versus the small caps. So thinking then about the domestic picture, more and more domestic productivity as well. And then we think also just in light of, the IRA Act, for example, that domestic stocks, domestic revenue sources have an opportunity versus the international revenue sources, hence then the small cap buyers versus the large cap buyers.
Okay, so you said you prefer Europe and Japan. You think they'll outperform the US. What about China? How are you looking at China, given that the reopening is underway, but certainly not without headwinds?
Yeah, so I think absolutely you need to always look under the bonnet with China. We're very lucky to be partnering with Harvest, the local asset manager, for our Asher ETF in particular. And good to see the news about society opening up more openly now. And over the next couple of weeks as well, we will see increased spending just in the run up to the Lunar New Year. So this is effectively the Chinese Christmas. So there, from that perspective, we think there are buying opportunities as well. China was also very heavily hit last year. So again, this continued theme of buying on the dip.
So with all of these themes, any particular tickers that you like that you want to call out?
Yeah, sure. Thank you very much for the opportunity. So China, let's start with that, Asher in particular, ASHR. Then we also like from the US perspective, S&P SMPV. This is the ESG dividend aristocrats collaborating with S&P there for having some income in portfolios. Also from the value perspective as well, we have the S&PV. So ESG, S&P 500 value. And then when we look as well at other approaches for the international equities, then DBJP, which is our currency hedged Japan equities fund. We think it makes sense to hedge Japan always just because of the rate differential, and this is only going to get wider as the BOJ remains committed to 0% rates and as the Fed continues to raise rates. And then for the European or international kind of exposures, then we like dividend safe here, and there I would identify HDEC.
Okay, so a lot of talk about value in this conversation. How are you looking at growth this year, at growth stocks?
I think when we look at tech in particular, that's always been like the golden child of growth. I think the tech is still interesting, but we need to think about it in a different way. We already see a lot of cuts in terms of jobs on the tech side, so maybe this growth aspect is not going to really be there. It's less relevant than it has been historically. We do see value as maybe the more relevant style. It's kind of been out of favor for the last 10 years, but there's a window of opportunity just as this pivot away from growth.
But when you think about inflation, if inflation is clearly moderating, CPI came in at 6.5%, well off the Fed's 2% target, but lower, which was a big headwind for a lot of these tech companies. Strong dollar coming off, another headwind that potentially could become a tailwind. Should that benefit these companies, or is it going to be recession that really dominates the headlines for these companies?
I think there is still the recession component. We also identify as well, if we look at some of the streaming services, for example, a lot of these will actually be kind of things that people start to cut out of their spending. So, less reliant.
I'm switching over to CNBC. Okay, the highest I saw was 278.81. 278.81. Let's see. Maybe we can get back up to 280. I think she wants it.
U.S. defense budget. It represents a nearly 10% top line increase in spending versus last year. It's the trajectory of the future budget that is so highly uncertain. So Cowen this week saying that a full year continuing resolution, basically a stopgap funding measure or longer for discretionary funding, quote, may be the best outcome. That's pretty incredible because, yes, it would keep the defense budget at current levels, but that would still hurt military modernization as new programs wouldn't be able to commence. Now factor in the changes to the R&D tax credit amortization, with companies no longer getting to immediately deduct research and development expenses, instead having to do
Right up to resistance. Let's see. I want to see what you're doing.
over a 5-year period. Start the 2022 tax bills. It's shaping up to be a messy earnings season for defense contractors, especially those that hadn't already baked in tax change charges into their forecasts last year. And David, while these things are not necessarily the flat and visual things you want to talk about when it comes to aerospace and defense,
that's where I bail. So let me go check because it looks like we could be coming up on it, and I want out. Oh yes.
Tax accounting and fiscal gridlock are very much.
I'm taking small profits today, folks. Okay, we crossed over 279. See if we can stay above 279. So 278.80. 3. I don't know why the sound goes out on this thing. It just does. It's projected off of the 279.
Programs that it recently.
We're going to see if we test it again and again and again. That's 1, 2, 3 test.
That we got. That could allow this company to outgrow its budget. It could bring in amazing things over the next few years. But that presents an issue because it will not be able to be comparable to prior years or 2 years after that, because it may be creating some sort of an outsized impact. And so that includes, by the way, this $464 million contract from the U.S. Air Force from this week. But this Goldman analyst says that the company, it could face some budget pressures eventually, and that those two growth programs are starting to create difficult growth comparisons. Northrop also faces some margin pressure and free cash flow pressure, this analyst says.
So, Rick, this was a stock that was in favor until basically this year. It's down about 14% in 2023. It's off about 4% today. That $375 price target, quite a bit lower than where it's currently trading. What do you see from a technical perspective?
Well, the first obvious thing that stands out to us is that we had this kind of messy long-term uptrend with this white dashed line here, and we've had a major breach of that support here. We also broke below our purple 252-day exponential moving average, which is a major source of support as well. So we broke through these two important points, and now we're kind of perhaps finding a bottom near this green dashed line near 465, where we had a triple bottom forming.
Hey, Bumpy.
One there, and one there.
Good morning.
So
Good morning.
this is another key point to
Look at
watch
that
today.
QQQ trying to
If we
plan
do
the
breach
exit,
this
sir.
one, we could go all the way down to 435. There's not really a ton of price action to be watching there. We've got a double bottom there. And there, actually, sorry, a triple bottom around there. So 435 could be another area to watch for this stock. And really, they're looking at for a price target of 375. That would be about 20% down from where we are right now. So that could be pretty dangerous for anyone who's bullish in this name still. In terms of the RSI, we're at the oversold mark here.
278.
We are crossing below that 30 threshold pretty significantly. That's another bearish sign in this name. So not really
right
much
up
for
to
the
it and
bulls
bounce right off
cheer
of
about
it.
today. Really kind of a rough day overall for this sector here. Watch the 252-day exponential moving average right here, this purple line. That's the point that we would need to retake in order to
QQQ rejected previous day close. Need to fight back. I know you watching with me. Oh my goodness.
So we've got 473
yes.
and 465 to the downside there, that green dashed line. So those are kind of the two.
I need her to just break through. The truth is, I could get profitable if she gets back up to 278, 80 something, 278. So the next time she goes back up there to retest, I'm taking my little 50 bucks and I'm getting out of here because I am not going to be sitting here all day today. I don't want to sit all day today. So if she gets back up there, I'm sure she'll retest it again. And when she does, I'm cashing out. I think the highest profit I saw was like 50 something. It was like $48. Don't be greedy. I'm taking it. I'm taking it. Now I'm down a few pennies. Fight back, sis. Fight back. Get it back up there.
An equal weight rating.
Only need like a little 50-cent move.
Retail on a whole right here. Seeing that ongoing risk for the first half of this year for
get up there, fight. You could do it.
Specifically those with negative year-over-year
You could do it. Fight through.
Retail, the risk is shifting to see that inventory pressure from there to the deleveraging of sales. And that
I promise you this time, and I say it every time, but I am learning. Base hits count.
So Rick,
base hits count. But you know what'll happen as soon as I cash out, she's gonna break through and shoot up to 284.
Right now, it's already gained what 14% in 2023.
That's the story of my life.
Investors really have bet on the consumer. But when you take a look at the chart, what do you see?
No,
we're
we need you to get back up.
65% since those yearly lows near about 779 here. And we've been making a series of higher highs and higher lows since we had this earnings event back in August. And I always find it interesting how trend lines can work here because we've got this trend line starting with the lows, this white dashed line, going across these more recent lows near 11. And all I did was duplicate this trend line. This is the exact same slope and trend line and everything going across these highs here, and it comes in right on the money there as well. So this gives us a channel to watch now for potential breakouts. But before we even look at the channel here, I would say that this green line here, this orange dashed line near 11 represents a bottom. That's where price bottomed out recently. And we've got these highs near 15. So 11
thank you for the commentary because I
need
it. It helps me understand
before we even
more.
really kind of consider that channel. Now, we've also got some even closer term support and resistance here. We've got our purple 252-day EMA near 13. And we've got two shorter term moving averages, our yellow 21-day, our orange 63-day, near about 12. So a pretty narrow range here we've got to look at in the shorter term and a broader range to look at in the longer term. RSI not really telling us much except that momentum is favoring the bulls once again. We're on pace for our 7th green day in a row as well here. So we'll have to see if we can hang on into the close for this name.
Yeah, from a longer term perspective, the analysts aren't very bullish on this name. Only 2 buy ratings. I was taking a look. Goldman Sachs and Guggenheim both have buy ratings and $18 price targets, but the majority of analysts definitely in the hold camp for that one. But as you said, pretty
Why
impressive
won't you
run
go
up from
above
those
50?
lows.
Get yourself
All right,
up there.
Renita, finally taking a look at McDonald's today. It's another winner today. Not up as big in terms of 2023 gains, but still a winner nonetheless, up
Okay,
about
so I'm
1.5%
just watching
in the first few weeks of the year. Talk to us about what you're looking at for McDonald's.
I think this is a very interesting neighborhood recession story, I'd like to call it, but not in the way that you might think. Now, Loop Capital made a note that updated its stance on McDonald's, actually kept everything the same, and it reaffirmed the buy rating. It also kept its share price target at $328. This analyst gave an update, however, because after his latest checks on franchises, he's seeing same-store sales growth ahead of expectations in the fourth quarter. He said that same-store sales were up between 7 and 7.5% in December, and they grew between 8.5 and 9%.
Glued to the screen. Do y'all see me? I'll be glued to, absolutely glued to the
Ahead of
screen.
the prior estimate for 8% growth,
Just
and then the consensus
mesmerized.
of up 8.1%. Now, something interesting when I was kind of digging back into the crates, doing some research, McDonald's executives back in October, they said that they were expecting a recession, but they believe that they're in a strong position to weather any potential economic storm. They said that because they were already getting lower income customers who were trading down.
I have some questions. If anybody, hey, Pent Up Wanderlust, hey. I have a question for a trader who is looking at this with me over my shoulder or whatever. This is the 15-minute. Let me go back to the hourly chart because that's the one. Because I have two calls and I'm trying to decide, should I stay in them? And my chart says stay at least to 280.
Maybe going from Chipotle to
What happened
McDonald's,
to
and
my,
this happens in recessions.
I
with
hope that's
McDonald's,
what this
especially in
says.
neighborhoods that do not have grocery
I'm looking at
stores.
my indicators.
And you can see that the recession story is playing out in McDonald's favor. And its
You know, this
executives
RSI is pointing
are
like straight
believing
up.
it, and it
This
makes
looks like we
sense that
might be
it's going
coming
to
out.
see more growth for the fourth quarter of last year as well.
This is the hourly chart.
Yeah, Renita, I think
I
that
don't
safe to say that
know.
it's cheaper to eat at McDonald's than it is to go grocery shopping and cook.
It is. You're right. And definitely in the neighborhoods that don't
And doesn't this
have
yellow
grocery,
part
food
mean
deserts. They don't
like
have grocery stores.
the
So
beginning
they
of an
resort to going to
uptrend?
McDonald's or other cheaper
Y'all, I'm
or
trying
cheap
to
as
make
cheap
sense of it.
restaurants to get
But I
food.
feel like, okay, this is the hour. Let me look at the daily chart. For sure, I think my daily chart is saying a call's a good move. Because look at this.
What are you seeing
Look at
for
this.
McDonald's?
I don't know, this RSI is slightly pointing down.
Another downward channel
But
to
look
be
at
watching here.
this.
A little
Look at
bit
my
messier on the
MACD.
upside. And I
I
chose to
don't
do the
know.
channel from our best
Well, there we
close
go.
and
We're
kind
at
of ignore this,
279. We hit it.
this
Okay, well,
intraday
shucks.
price
She on
action
the
upward.
move.
So
I got a
usually
roll
it's
while I'm
better
talking
to
and
look at the
analyzing.
closing
Hold on.
prices rather
She
than
making a
intraday price
move.
actions that can be much
Hold tight, y'all. I might be able to cash out.
volatile
Hold
than
tight.
the closing
Holy
price. That's
smoly
where the
cannoli.
things kind of settle
Yes,
for the
we got
day.
some profit. She
And
had shot
looking
up
at
to
this more recent
279.
action
So let
here,
me see.
we've got to the downside, the 262
Okay, I can't
level.
talk.
That's
Can't
about
talk.
where
Can't talk.
we ended
Gotta
up
go.
opening after this gap. A little
Okay,
bit
so
above
she
that
hopped
point
up.
here, but that was also where we bottomed out here. And the top of
279.
this
If we get
range is
above
near the 270
279,
mark right there.
we off
So
to the
in the more
races.
short term, once again, we're kind of bookended between our two shorter term moving averages. We've
Looking
got our
pretty
yellow
good.
21-day.
Think I see a crossover on the horizon, but
Our
them
orange
crossovers could be
63-day
tricky.
coming in near
Okay.
265. So
Previous day
once again, kind of a
close
narrow range for
279ish.
looking
Needs
for a
to
breakout in
break
this
and
name. Our moving
retest that
averages are all
area to
trending
go
sideways, though,
higher.
so I'm not really seeing
Okay.
a ton of strong
Volume of an invoice is
directionality
different.
to any
We could
trend
talk about
here.
it. Hold
RSI
tight. Let me make
middling,
sure
not
I
really
get
giving
this.
us any clues
Okay.
about potential
It
breakouts or
says
divergences.
previous day
but it
close
is
was
slightly tilted
279
toward
ish.
the
Yes.
bearish side
Need to
in
break
this
and
indicator
retest
that
that
we follow
area to
here,
go
the
higher.
hinges
Okay.
momentum, the
But the
speed,
truth is, I'm
velocity of
already
price change. So
profitable.
not
I'm
really
just trying
giving
to
us a good
decide
read
if I
one way
need
or
to
the other.
stay
The
in or
picture's
should
a
I
little cloudy
cash
right now
out.
in terms of
So let me
direction.
see if I got this
I
right.
guess that shouldn't be a huge surprise. A lot of times
Okay,
with
it
those
needs
recession resilient
so
stocks tend to
280,
be
anything
slow
above,
and
it
steady
needs to
versus
retest this
wild swings.
279.
Have
It
to leave
needs
it
to
there.
get above
Rick,
it and
Renita,
retest
thank you
it.
both so much.
Okay,
Really
so
appreciate
let
it.
me get back over here and see.
All right.
Okay, because we're hovering right around 279. Yeah, she's having some trouble getting past 279. We're right there, right at it. She got above. And we just keep kind of toying with 279. Okay, so I'm going to chill as long as she stays up there and she doesn't break down past this, you know, if she don't start breaking down past these SMAs,
many traders may be willing to take on
then
additional risk in pursuit of aggressive
I'll stay
growth in their
put. I think I
portfolio.
got some.
More power to them. But if you're looking for a less risky alternative,
Wait a minute, let me
you
get over
might
here and
want
see
to
what you're
consider checking
saying.
out our income investing course. In the income investing course, you'll
Okay.
explore investing
You
strategies
said
designed to generate regular income, preserve capital.
Oh,
First, we'll delve into risk.
thank you
and
for
return
doing that because I'm so
You'll learn about the
distracted.
different ways to allocate a
I'm
portfolio
so distracted.
and create a payment schedule.
278,
Then we'll take a deep dive
80. Okay, come on. We were 20
into the
cents
assets
up. Okay, gotta look at this. 80.
commonly held in income portfolios, dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time.
We go.
Along the way, you'll watch
25.
videos, take quizzes, and perform paper trades to
Okay, so she's retesting.
practice your new skills. So if you're looking for an edge, consider your education. Head to the education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network. The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Okay, so that looks like the second retest, like 1, 2. I hope I'm looking at this right too, because it looks like, I'm gonna bring this chart back in here. It looks like she's retested, or she's tested this once, twice. It looks like she's thumping at it again. Girl, get yourself up there. 2.
We empower those who act. Those who see the
278.
correlation between things.
95. Okay, there we go.
Above.
279. She wants to do it. She's a runner. 279.03.
By meeting every
Okay.
turn with a heightened awareness of what's
279.19. She's above it.
possible. Constant assessment. Determine the best position.
She's
Catch
above
the
it.
perfect wave. See a new
Okay.
where risk meets
Let me
opportunity.
get over here and make some decisions.
Let's walk through
Life
charts,
choices.
one of the most commonly used features on Thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of
Okay,
drawing.
let me see.
For symbol comparisons,
3-minute
select
candle.
studies.
We need to
This also
close
gives you access to
above.
hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to Thinkorswim, head to the Education Center on tdameritrade.com.
Welcome back to Morning Trade Live. It's time for a developing story. Markets correspondent Jenny Horn joins us. Hey there, Jenny. Happy Friday. We're talking Netflix today, which I know is a stock you like to talk about, and it's a winner today, up about 1.5% thanks to a bullish call for the streamer. Tell us about the call.
Yeah, we've seen a lot of analysts' reaction to this name, Caroline, as we have seen. Obviously,
QQQ is honestly ugly to trade at the moment. Catching support off the 200 moving average, need a good push to 279.50, then pull back. Yeah, now that I understand. That I totally understand. Yes. Okay, she needs a good push to 279.50, then pull back to previous day close to retest. That I totally understand. Yes, okay. Got it. That makes total sense to me.
Their depth, their breadth, and their quality of content. Additionally, Oppenheimer today did also raise its price target to $400 a share from $365 and kept an outperform rating ahead of its fourth quarter results, which are expected next Thursday after the closing bell. But this analyst cited higher comp valuations behind his price hike. He said, in addition to subscriber trends, the stock will likely react to comments surrounding the progress of its ad tier and new initiatives to reduce
a second because she keeps bouncing up there to 279. She's looking like we might be okay. We might be okay. If she can hang, like you said, above 279, she make a nice strong push for 279.50. Who knows? But as long as she stays above 279, I'll take anything above it because I'm profitable. And as long as she stays up there, we're in good shape.
No stranger to some of the pain throughout the last year, but I do have to say that when it's winter here in Chicago, and I know
pretty
you can relate in New
promising.
York, I do
Let
tend
me
to
get off
feel
of
like
this.
I'm
Let me
watching
get on a
Netflix
higher
quite frequently,
time
and I
frame
say
and
from
see what's it looking like. Okay. We closed the candle above.
content standpoint, they've had some great shows
Okay.
as of late. So maybe that's, fueling some sentiment as people are not hopefully.
See, I think
canceling
once
their
she breaks
Netflix
279, she's
or
running for
sticking with the
280.
streamer.
That's what my mind says. I fully understand open interest. Good, Bumpy. Yay. Everybody's getting better. Everybody's getting smarter. Everybody's understanding a little bit more.
Price target is $320 for Netflix. It's currently trading at $336. So it seems like we might have to see some adjustments maybe from some of these analysts if we're going to see this bull case continue. It sounds like we could be in for an interesting time next week.
Right, when they report earnings. And I also just finished Ginny in Georgia last weekend. So I have to say it's great ending. So keep watching.
All right, I'm going to. All right, thanks so much, Jenny. Appreciate it.
279.
Now it's time to bring in our panel. Joining me is George Tillis, Senior Markets Correspondent, and Scott Durfee, Senior Manager Trading and Education at TD Ameritrade. All right, guys. Let's start with you. We're actually looking at a Dow and Russell that are both positive right now. We have the NASDAQ still, actually NASDAQ's turned positive too, just barely above the unchanged line. Just need the S&P to get across the unchanged line as well and move to the upside. Just in the very near term, what do you make of this market comeback that we've seen despite the banks still lower?
Yeah, well, first off, good morning. It's good to see both of you. As the fourth quarter really earnings season starts to kick off today, there's some kind of, and you alluded to it, Caroline, there seems to be a bit of a tug of war that's being waged right now on Wall Street. On one side, there are those who believe that
if you look at the pre-market chart, this area was a pre-market pivot. Okay, this was a pre-market pivot.
Lackluster results and downbeat forward guidance will trigger further declines. So I don't know. We could be just kind of in between all of that or some of that. For the moment, there's still
so I'm just gonna hold tight.
We just struck the bell this morning on
not
the
doing
earnings
anything.
season for the financials. So
just waiting to
as we see these things start to develop today, tomorrow, and over the next little bit here, I think that at that point we may be able to start making some definitive judgment on what's happening here. But in the meantime, I'm just seeing this as a tug of war that we'll have to wait to see how it settles out.
All right, speaking of tug of war between bulls and bears, I stand corrected. Some of the bank stocks have actually turned higher. We're seeing JP Morgan higher, Goldman Sachs, which reports next week, higher. So tug of war in the bank stocks as well. George, what are your expectations for this earnings season? Do you think expectations have come down enough, or are you in the earnings recession camp?
Just having a little challenge.
Well, I think it depends on which industry group you're looking at. I'd suggest maybe the technology names maybe have some further to fall when it comes to earnings expectations, maybe some downbeat guidance, especially in the software application space. But I think maybe we're starting to see a bottoming out in earnings guidance for the cyclical names, particularly the financials. The healthcare sector, I think, is another area where earnings are rather stable. I think consumer staples are going to remain stable. And of course, maybe even energy. I know energy prices have fallen, but you have to think about the nature of energy stocks. They're not necessarily tightly correlated to energy prices. They typically do well when energy prices are relatively stable. So again, I think there's going to be some positive notes or outlook in those areas of the stock market. I think right now, we're still in a churning market. I'm a little bit concerned right now because of two things. One, if you look at the S&P 500, we really can't get above the 50-week moving average, which is around 40, a little bit over 4,000. So we break around 4050 on the S&P, that might make a nice trend reversal. But I think the other thing to keep in mind is look what's happening in the background. There's so much of this momentum in the meme stocks and the short squeeze stocks. And how many times have we seen this in the past where we see this huge short squeeze across the board and all of a sudden the markets roll over? So, there's a lot of hype right now. And again, that's a little bit of a cautious tone you have to consider. But at the same time, maybe we'll see some additional short-term weakness in the Chinese stocks and the international stocks. But I think with the U.S. dollar weaker, stick with multinationals. I think multinational industrials, Caterpillar, for instance, Boeing, those two stocks have been performing quite well and may continue into the year.
Those are definitely the safer plays, Scott. But even in addition to some of those so-called meme stocks, we have seen a lot of risk on appetite, a lot of bets in the consumer.
Hey, El. Well, we're just, nothing. Everybody's popping in and out. Everybody's checked in. I'm about to cash out a QQQ, these two puts, because I'm not going to toy with this all day. It keeps going. It goes up above 279, the highest I saw. Lord, if it could just go to 279.25, I swear to goodness, I think I would just bail because I don't want to be here all day.
When we think about this,
so she's struggling. She's above 279. I'm profitable with two calls, and I need to just pick a profit level and come one out.
We don't know for
which
sure
I'm going to do.
Is going to maintain its posture, and then we always have this looming threat of inflation that we're still dealing with pretty heavily. So I think we're just in a gray no man's land area.
Other than that, everything's cool. Everything's the same old, same old. Everybody's checked in. I don't know who's trading what today, though.
I don't think we have any clear answers to your question.
I don't know. Did Frank check in?
So, George, what are you going to be keeping an eye on as we head into the final trading day of the week, the long weekend, and as you look ahead to next week? What's on your radar, aside from the fact that we're going to be speculating about inflation and what it means for the Fed and what it means for the economy?
Well, I think what I'm looking at is closely watching the two-year Treasury yields. One of the things I've noticed in the past couple of weeks or so, or since the beginning of the year, is you actually see the federal funds rate above two-year Treasury yields. So this is becoming very interesting in the sense that maybe the Fed is near the peak in terms of their peak interest rate in our cycle and their increases, because again,
I'm just looking for an exit, y'all,
relative to 10-year yields,
I want out.
It's deeply inverted. So
I'll come in, I'll come back in if she gets above 279 for real good.
This year, but
this toying around here, I don't like it.
Just because I think
take my pennies and get
cycle.
out.
It's not the way I look at it from an opinion standpoint. I'm just following the Treasury market, and with 90-day rates above two-year yields and the Fed following two-year yields, I think the narrative may shift towards a Fed.
So let me show you real quick, because I keep pulling it back because I'm about to get out of here. So this is what I'm looking at, and she looks like she's trying to take a turn. I need her to just get right back on up there to like 278.90 something, and I'm out of here. I just need a few more pennies. Okay, so I'm taking you out because I'm about to come out because I think she's gonna run for it, El. I'm out. I'm out.
Thank you both,
That's
Scott
a 90.
and George, and thank all of you for joining us.
If she go back above 279, I'm out.
Stay tuned because Trading 360 with Nicole Patalides.
I'm creating my closing order. as we speak. $83.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the options for volatility course, we explore what implied volatility is, how it can potentially affect the price of an option. For
You're going the
example,
wrong way,
say an
babes.
option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of applied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for the full options for volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern.
Hey,
live
happy
from the New
Friday,
York
y'all.
Stock
Happy
Exchange,
trading.
only on the
Look,
TD Ameritrade
I always say this. I should have bailed at 2, right when it got above 279, because I think the highest I saw was 279 and some change. So if she gets there again, I'm out.
At CME Group, we empower those who act. We deliver tools to help manage risk
Bounce off of there and get back up there, please. Only need a
in every
quarter.
market climate, across every
Need
major
like
asset class,
25
to
cents,
seize each
ma'am.
possibility at precisely the right moment. CME.
Thinkorswim by TD Ameritrade is more trading platform. It's an entire trading experience better and just might change how you trade forever. Because once you experience Thinkorswim by TD
I don't know why that thing goes in and out. But it just does. The volume, it'll just blank out. I'm pretty sure it's my internet.
Ameritrade.
Sure.
There's
What
no
y'all
going
doing?
back.
What y'all doing? What y'all doing?
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Anybody watching
Head
this
over to
foolishness?
tdameritrade.com/webcast and start learning today.
We was doing so well. We were having such a good time.
Thinkorswim by
This is
TD
what it is,
Ameritrade is more
man.
than a trading platform. It's an entire
All right,
trading
I guess I
experience.
better strap back in. I'm gonna be here
With
a minute.
innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back. When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Good Friday morning. We are 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. And you see somewhat of a mixed bag. We're off the earlier lows. We've gotten in a slew of bank earnings. We'll comb through those throughout this hour. But it is still a winning week on Wall Street. In fact, it is back-to-back winning weeks. So 2023 is still looking in the green. Here's a look right now. The Dow Jones Industrial Average up 31 points at 34,224, up 0.1%. The S&P is down 7 points at 39.76, down 0.2%, but up 2% for this week. The Nasdaq down 0.1%, 11,446. That is up 3.7% this week. The Russell gaining 0.1%. Let's take a look at some of the futures products right now as we speak. We are seeing oil and gold higher today. Right now, oil's at $79.49 the barrel, gaining $1.10. Gold, 19.
No, this isn't coffee. You know, I gave up coffee. I'm
continuing
drinking
that
tea
trend
now,
higher,
Bumpy.
up over 18
I gave up the
today.
coffee because I gave up
Bitcoin
the
at
dairy.
19,350. That
Well,
too
you
has
know,
been trending higher. It's
tea
up
just
1%.
works better. It keeps
And the
me
US
from
dollar
being
has
so
been trending lower. In
congested.
fact,
You know,
it's at 101.92.
had to cut the dairy loose. You know, we all lactose
For a look at some of the
intolerant,
top
so
moving stocks today,
I
joined by
try
Jenny
to,
Horn,
you know,
markets
be
correspondent
kind to
here
my
on the TD
body.
Ameritrade Network.
So
To take
no,
a
that's
look at
tea,
Tesla.
and there's some
Tesla's been under
peppermint
pressure,
tea
slashing
and
prices for
this.
cars. What it means?
I
Tell us
don't
the
know.
very
I've never
latest.
seen this in the
Yeah, Nicole,
States,
the
but
headlines
it's
just don't seem to
like a
stop in this name as it does feel like we
eucalyptus mint honey tea. It is so yummy. I don't know.
to break through the news we got
Mm.
today, they did announce that
Nope,
prices
just me and the
for
tea.
vehicles sold in the United
Just
States
me
as
and
well
the
as Europe
tea.
will be reduced by nearly 20%, which may allow some buyers to qualify for that key $7,500 U.S. government tax credit. Now, the price of Tesla's baseline Model Y crossover has been cut by almost
Nope, nothing in my
20%. That's the
coffee.
biggest
Nothing in my
reduction I
tea.
saw. In the high-performance version of its Model 3, saw a price reduction of about 14%.
Let me put my
Now,
chart
in
back up
Europe,
here so
Tesla
y'all
cut
not
prices
just
on its
looking at my
Model 3 and
forehead the
Model
whole
Y
time.
vehicles in
Face.
Austria, France, Germany, the Netherlands, Norway, Switzerland, and the UK. And following the news, we saw analysts
It is
react
good, I
naturally, with
promise.
Guggenheim downgrading its shares actually to sell with an $89 price target. But on the other hand,
278,
Citigroup did trim its price target, but to
47,
140 a share, quite
278,
different than
44.
$89 a share naturally, but maintained a neutral
That's not
rating.
what I was
And
trying
that
to
Citi
hear.
analyst said the overall stock setup is improving slightly as street
3.
estimates continue to come down, with the latest U.S. auto demand data points looking more encouraging. But he did acknowledge a fair amount of debate and low visibility in Tesla, especially regarding its gross margins. Margins seem to be the theme of the analysts today, as Evercore ISI echoed a very similar sentiment, saying that with Tesla's wild start to 2023, as they continue to dramatically cut prices, right now margins could be at a risk. Now, he said, really, this coupled with the price cuts in Europe, there will be a significant impact to the companies. So take that for what you will. I mean, I saw this as a positive, obviously qualifying for that tax credit, but then also there's the idea that those that purchase their cars for delivery by the end of
I'm feeling good this
2022 will be
Friday. I just had
clearly,
my
but being that
cannabis
they bought
coffee,
cars
so I'm
now,
really
prices
ready
been
to do
reduced. I
some
mean, what a bummer.
trading. Bless your soul. I wouldn't advise that.
And then it goes on sale.
That's not it. I wouldn't advise that at all.
Having those subsidies is certainly helpful, but that
That's not what I would advise. That is not what I know. That don't sound like that's gonna go well.
is front and center today. We heard from JP Morgan, Wells Fargo, Bank of America, Citi, BlackRock, but
Bless your soul.
JP Morgan. What is it that jumped out at you?
Yeah, and JP Morgan, I always find to be one of the more interesting earnings reports because Jamie Dimon always has thoughts to say the economy, which today was no exception. But they did report their fourth quarter profit rose 6%, boosted by rising interest rates that sent its core lending income to a record high. The bank did post net income of about 11 billion or 357 a share, which was up from a year ago and did also exceed the street's forecasts. Revenue rose 18% as higher interest rates drove boom in their lending business, which was one of the brightest spots. This number did also exceed forecasts. But this increase came even as the bank warned it was preparing for what it now expects to be a mild recession. CEO Jamie Dimon, of course, did say in a release that the economy remains strong today, though he cautioned that we still do not know the ultimate effect of headwinds like the war in Ukraine, as well as monetary tightening and naturally high inflation. He also said that consumer cash buffers are likely to return now to pre-pandemic levels, and said they are hiring and still in growth mode. So some different sentiment from what we've heard from some of these tech names. However, they do see modest headcount growth into the new year. And we are seeing actually their total loans at 5% and mortgage rates
on the rise. If she get back up to 279, I'm out. I mean it this time.
Echoing a lot of the similar themes that we've seen throughout the broader economy.
Profits
It seems
are
like the
profits,
street
and I keep
likes these
saying
results.
it,
I mean,
but I
beats on
didn't
pretty much all front from the big bank,
hit the
and it's
button.
actually reacting, at least as of
But
right
I
now.
hit the
It's
button
all
this
over the
time,
place this
y'all.
morning, Nicole, but shares off about 0.75%.
So we
One of
need
the
about a
best
75
performers
cent
of the banks
move.
that had earnings.
Yeah, and you know, these names,
Where
as you
were
said,
we
they've been all over the
before?
place. I
Yeah,
mean, this
that was
morning
a
I was
nice
looking, I
little.
actually wrote down some numbers. For example, JP Morgan was down
Yeah,
2%.
about 75
Bank of
cents.
America, Citi, all of those were
75
down.
cents
And in
up.
fact, now
That's amazing
I
that you
see
don't
up
need that much.
arrows.
You don't need to move that
We're
much.
seeing,
75 cent up.
up arrows here. So they are
And we're
looking good at
good.
this point. Jenny Horn, thank you for that. Appreciate it. Markets correspondent. Let's get some insights in the news shaping the markets. And for that, we welcome in Hugh Roberts, head of analytics at IQ at Quant Sites. Nice to see you. Tell me about the opportunities you're seeing for folks. I mean, this is a new year. Citi talked about a recession in the back half of the year. There's still a lot of concern about the economy, but what is it that you're watching, particularly abroad in Europe?
Couple of the stories you guys have been talking about actually are really highly topical.
270, 840. Okay, what's going on here? Hold on, y'all. Wait a minute. I gotta log out of something locked up. Well, time for me to slide out this office. All righty. You got it. Trade the chart, trade the chart, trade the chart. That's what I'm doing. See you later, living my dream. Thanks for all your help. If QQQ falls to 70 and 15, watch for the flush to got it. Thank you. You said below 78. 15. Got it. Thank you. And I'm gonna sit over here and pay attention too. Let me see, where is she? 31, 32. Yep. $3-minute. Have my ready. Can you see it clearly on the 5-minute? Yes. Yep. I'm going there now. I hate it when my system does this. It's going again. Okay. And the twos. Okay, you can see it clearly on the 5s. Yep, I'm looking right now, but I can't get anything. My data won't come up. Y'all, this is no good. No bueno. Okay, let's see. I don't know what happened. Okay, wait a minute. I'm going to the 5s now. Yes, thank you. I did. I got it on my cell. I had to switch over to my cell phone. But y'all know I don't like to operate like that. Okay, y'all, I am definitely focused now. That was such a good save. Living the dream. You saved my butt. Oh, Lord. Okay, so now I need to see if it's going to bounce off of this SMA or what. See if you can catch it. 277.50. Is it gonna bounce back? What's it gonna do? I see it. I see it. I see it. At this point, I'm not mad if it goes straight through because I got 3 puts that are profitable already. So, okay, let's see, 64, 61. All right. I'm watching it. I'm watching it. Okay, there are a couple areas of minor support by the 50, 277.06. VWAP is trying to hold through. If it falls this area, watch for 277.06. Okay. Needs to break 277.70 and retest to go lower. Okay, gone for real now. Thank you, living my dream. Thank you. I'm watching it and studying and taking notes. Okay, want to see a couple lower highs and lower lows before getting puts, and higher highs and higher lows before getting calls. Okay, not sure when you grab the puts, but would say don't get caught in the moment of buying in quick moves. Yeah. Because that's usually what happens living the dream. And you know what I have learned to do to cover myself is make sure I buy in the money contracts, and I buy them with a lot of time. I know they're more expensive, but just for times like this, like if I swing them, then I always have the 10 days. I know it's a lot, but it covers me in times like these, and it lets me relax, because one thing I know is QQ is going to do this whole, she's going to trade in that whole little range. So eventually I'll catch it. I don't know how much profit it'll be. Like I could have jumped out of those calls at any time. Y'all already know the drill. So whichever one becomes profitable first is the one I'm selling, and then I'll wait for the other one. That's what I have learned to this point, is to buy myself time when I purchase contracts. I never buy any that expire in less than 3 or 4 days, because it's better for me. And it gives that trade time to work out. So at this point, whichever one becomes profitable, I'm going to sell it. And then I'll wait on the other one to get caught up. So it looks like my calls might be profitable first. I don't know. Because it's easy for my calls to become profitable. They just got to get up to 278 and some change. And I think I'm a bail on those joints as soon as they get there. Oh no, I need to be closer to 279. 278 and some change. Yep, 278, 80, anything around there, I could bail on these. And then I'll wait on the puts. So we'll see. Y'all will know, you sitting here watching with me, because I don't know what this thing's gonna do. So I think I'm kind of hedged one way or the other with great contracts and a lot of time. So it's not like I got something to do with this money. It's just kind of tied up here. But I'll let y'all know as soon as I get profitable in either one. And either way, I'm coming out. Because unless she just does this, if she goes up, I got her. If she goes down, I got her. And I am going to make me some more tea. 278.20. Yeah, we were 277, 74. Wait to see. Okay. Before. Got it. I got it. I'm listening. Wait to see. Okay. To 77. We were down here 27. To 77.84. Oh, we ain't got no sound, nothing.
Textbook example here, guys. This kind of a chart gets dreams. You look at me. I'm talking about, again, bottom left corner to top right corner. You can see from around 275 all the way up to 336. Week, and this is exactly what I'm talking about, that staircase type pattern playing out. Take a step back. You can see the areas where we paused briefly, kind of regained composure, and then look at this vertical phase up here, consolidation 287, vertical up, horizontal 295, wash, rinse, repeat 310, 17 up to 330. Again, very well-defined trend environment to the down upside. A textbook example of the two phases of price development. And then look at this, we're vertical into the end of the week right now. Will we get a new area of consolidation at a higher level? That's what the bulls are looking for at this point. Let's move away from this intraday look. This is the hourly candles last couple weeks. Here you can see this is not necessarily the best chart in terms of a bullish scenario here, but it's getting better. Let me just explain. From 700 all the way down to the lows that we saw last year, and you can see how we're kind of grinding higher, right? We talked about this, a similar situation in terms of NVIDIA. Let me show you what I'm seeing here in terms of some of the areas of consolidation that have formed. You've got 4 to the downside and now 1 to the upside here. Balance area number 5 didn't form at a lower level, right? That's what the bears wanted to see. So this is encouraging for the bulls, yet we still need to take out the middle of 3. We're talking around this 400 level before we can really claim a victory in terms of this one. But bottoming out here, inching its way up, strong into the end of the week. And lastly, checking in on where things stand in terms of right now, you can see Netflix is above the 50-day moving average, it's above the 200-day moving average. RSI, though, a little bit limited in terms of this attempt to get something going here above the highs from last month. So let's keep an eye on RSI next week to see if we get some continuation in price and see if RSI participates.
Yeah, and that's why the charts are so impressive and important, because it may seem like it's bullish trade, it's been running hot, but that's not necessarily true when you go back and you're looking at the entire picture. Thank you for that, Ben Lichtenstein, always. The big 3, Charles Moon, Senior Market Strategist of Equities at Prosper Trading Academy. Thank you both very, very much. Coming up next, we'll spotlight retail trends that could disrupt the way you shop and you buy. Next.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then Watchlist. When the default list appears, select the name box, then Create Watchlist. Enter a watchlist name. To begin adding securities, enter a ticker symbol in the symbol box, then select Enter. Continue adding all the symbols you want in your watch list, then select Save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the Charts tab, select the list icon and then Add to Watch List. From the Scan tab, right-click a security and then Add to Watch List. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange on this Friday. Thanks for being with us. We've had some back and forth action after we've gotten in a slew of bank earnings. Those too have started off in the red, many of which have moved into the green. But it is another winning week on Wall Street, 2 weeks in a row of gains for the major averages. You can see right now the S&P at 3970, losing 1/3 of 1%. The Dow's at 34,204, up 15 points. The Nasdaq 11,406, down about 0.5%. And the Russell is gaining just fractionally at 1876 there for the small caps. Big story here, a developing story today. I'd like to bring in Kevin Green, senior markets correspondent for the TD Ameritrade Network. He's taking a look at Delta Airlines and the earnings reaction. I was listening to some of the comments from the CEO. He really talked about the rising profits and seemed really confident, particularly in a really difficult environment. What'd you make of the report?
Very interesting report here, Nicole. Actually, when you look at it, they actually beat on the top and bottom line, but their earnings guidance for the March quarter is going to be a little bit suspect here. So let's go through some of the numbers. First and foremost, they had revenue at $13.44 billion versus the estimate of $13.03 billion. And earnings per share came in at $1.48 versus the estimate of $1.30. So obviously they beat on the top and bottom line. But when you look at their estimates going forward here, they actually provided a range between 15 cents and 40 cents. That's a very wide range. And the street was actually looking for 64 cents. So they missed pretty significantly. That's why we are seeing the move to the downside. But they did project their first quarter forecast to be a little bit lower because of higher labor costs. So they are expecting that labor cost is going to continue to move to the upside here, but they are confident that the industry backdrop as of right now when it comes to demand will be consistent throughout 2023, and they do plan on delivering positive results throughout the year here. But one other thing that I actually saw that was very interesting, they do expect revenue to grow about 15 to 20% year over year. So that's also another significant move to the upside here, especially when we look at some of the costs that they've had to deal with. We talk about higher labor costs, but we also look at jet fuel costs has actually gone down pretty significantly. If they can level off or stay low, that could help out their margins in the future.
Right, understood. Kevin Green, thank you for that. A good luck there at Delta today. Appreciate it. That's Kevin Green, Senior Markets Correspondent here on the TD Ameritrade Network. It's time for our spotlight on retailers, in-store, online, shopping trends that you should be focused on in the disruption of 2023. Our next guest has all of this and will explain. Mauricio Viana is with us, CEO of MJV Innovation. Thanks for being with us this day as we're starting off a new year. Now, your company is doing a lot of consulting for more than 2 decades. You're working with big companies like Coca-Cola, like Unilever. You're watching consumer trends. But one thing that has really gotten your focus is the digital experience, physical and digital experience. What do they need to do, all of these companies, for 2023 to succeed?
Well, thank you for having me here, Nicole. We have just launched a report that mentions all this, what I'm going to say. It's a CPG and retail report. The most important thing to do is to understand the consumers, the consumer needs, the consumer behavior. And nowadays, consumers are very worried about sustainability. So what happens with the climate change? So CPG companies and retailers, they have to pay a lot of attention on what happens, with their products after they sell. So they need to be worried about like circular economy. How can you recycle the products that they sell? So that's one.
Right.
Another topic that's very important for retailers has to do with what we call fintechization. We see a lot of, a trend of retailers and CPGs moving towards the financial field, giving credits to potential retailers. So that's the second one. The third has to do with the online to offline, offline to online experience. So retailers have to pay a lot of attention to this because nowadays, many consumers, they just go to the store to try to understand what the product looks like, and then potentially buy online. And the last one has to do with the metaverse and the digital experience, using augmented reality, virtual reality, all this using technology.
Yeah, I mean, there's a lot of things to cover here. The first, ESG, sustainability. We're seeing a lot of companies having things that are now recyclable. And that's a theme that we've been seeing, and it seems like the right thing to do. I don't know how much it's costing these companies to do it. One of the companies eliminated green bottles and went to clear bottles because the green bottles were not recyclable. So that's CPG being consumer products and goods, right? I'd like to focus on the other point that you talked about, which is the fintech part of it. What does that mean? Does that mean they have to accept digital pay and crypto or whatever? I mean, you did have Jamie Dimon over at JP Morgan today actually noting about some of the competition, he said, from the likes of Apple and Walmart and their own ways to pay for things.
Exactly. Well, first of all, consumers expect a seamless and frictionless experience while they go through the stores. So retailers, they realize this, and they realize that it's very important also to create loyalty through with their customers, and allow them to pay with their own system. So they keep the money inside. They offer cashback loyalty programs. So this is digital wallets. So this is and also credits. If you're a CPG and you have, like, let's say retailers, why not offering them credit lines to help them purchase your own product?
I don't know if you could name some names. I mean, you could tell us maybe some companies that are doing things right, in your opinion, or maybe some that need work. I am curious about the metaverse story, but before I get to that, just maybe, are you seeing some companies that are in consumer products or retail that are doing things right? And what is it that they're doing right?
Well, I'm a big fan of Coca-Cola. It's not just because they are our client, but you see a company that does good. It's positive for the, it's looking positive for the society, and is worried about, reducing their impact on climate. So recently they just launched a like the crystal water. It has a worse experience in terms of holding the bottle, but however, it impacts less the
right, the environment.
And they are